Inflation. We're all seeing it. We all know about it. And, just day-to-day life, normal people I know, friends, family, we're all talking about inflation, right? When we're going to a restaurant together and we're going, holy crap, what the hell's going on with these prices? People are actually generally concerned about inflation. Now I'm going to start talking about when it actually seeps into hyperinflation. Because when we look at this 8.5% headline in the US, I have significant doubts. In Australia, where I'm from, it's 3.5%. Now, just internally, for me, I feel it's around 10%. Wherever I go, it's around 10% at least. So I don't see where the 3.5% is. Now, in this video, I want to discuss about what the real actual inflation numbers are. I want to talk about how close we are to hyperinflation. I believe we're closer than we realize. We could actually be on the footsteps, right, on the threshold of hyperinflation, and we may not know it. We may not know it because the numbers we're looking at aren't exactly real. If you're looking at 8.5%, which is a lot, or 3.5%, which is still a lot compared to before at least, then it may not concern you as much. But when you see the real numbers of inflation, that is when the alarm bells should be ringing. Now, I want to talk about also why I believe inflation could get worse. And also my advice, don't take financial advice, but at the end, I'll recommend the strategies that I'm doing to actually deal with inflation and perhaps make money from this. But really, it's just to protect your assets and your wealth from this coming storm that's happening. Now, I want to talk about a set of statistics, not just the CPI inflation number, but the shadow stats from shadowstats.com. So back in the 1980s, they switched ways to measure inflation. It used to just be prices from one period, a basket of goods compared to a period from before. And that's how we get inflation. Now, the way we do it is different now, right? Now we do a thing called hedonic adjustments. And what that actually means is that it accounts for the increase of the quality or the value of the goods that it delivers. Now, the best way to explain it is with technology. Let's say that you buy a $1,000 iPhone. And let's say 10 years ago, it was also $1,000. It was always, every year a new iPhone comes out, it's $1,000, right? Now, what they actually say is that the value, let's say the phone is faster by 10% every year. The way we do it now is that the next year, if you're still buying it at $1,000, you buy next year's phone, but it's 10% faster. What they calculate is that phone is actually 10% better than before. So really, you're getting a cheaper phone, right? It's actually, actually, that's not inflation, that's nothing. That's actually deflation. Or you might buy a new TV. The new TV is the same price as the previous one, but you can access Netflix, and it's got a Chromecast, and you can, play music on it or something. You can do extra features on it. And those extra features make the TV on paper, or the way they calculate, actually cheaper. And that drives the price of everything lower according to the calculations. But according to shadowstats.com, which is the way we used to measure inflation before the 1980s, without these adjustments, just looking at price of one thing, comparing it to a previous period, according to them, we're getting 17.3% inflation, right? And if we look at hyperinflation, as one definition is anything over 20% inflation, we're very close to hyperinflation. And I'm going to put a chart of the shadowstats.com, which is a service that actually does the calculations of CPI. So that is more than double the official number for the CPI. Now, I'm actually quite curious how they actually calculate the CPI, because they have to do a lot of hedonic adjustments to get something that's 17.3 to 8.5. And 8.5, by the way, is still a lot. Now, I'm going to explain to you, why I think also this inflation is potentially just starting. But, why do I make this video? I mean, I haven't, obviously, if you're following my channel, I thank you, by the way. I haven't made a video for a little while, but this one was a video to get me back in. And, obviously with my, I've had a lot happen this year, new job, relationships, and a lot of things happening in my personal life. But, on that point is that people in my life and friends and family have really been talking about inflation. We talk about it all the time. And they're not economics people. I went to the supermarket the other day and, I couldn't find, of course, it's Easter, so I couldn't find any chocolates, but the canned veggies and tuna was running out in the supermarket, People seem to just be buying up anything that was a little bit longer term, and it just really seemed to run dry at the local supermarket. People were really, I suppose, storing goods. The average person knows what's coming. They want to buy something today. They want to buy something today because tomorrow it may be more expensive. I had two people tell me that they know someone who bought a new car not that long ago, a couple of months ago, and sold it back at a higher price than the current retail price of a brand new car. I'm hearing that. So that wherever you're from, that might not be news to you, but to me, that is news to me. I've never heard anything like that in my life. And, I am, I would say, mainly a property investor, and I do trade the stock markets and stuff. I used to do a lot of day trading, right? But, predominantly I'm a property investor, and property prices, at least in Australia, I'm very familiar with, overall has increased 20% in 1 year. I mean, average increase is maybe 5% or something like that. On a really good year, it's 10%. If prices increase by 20%, that's incredible, right? In some cities in Australia, Brisbane, we're talking Tasmania, if you know these places, in Queensland, Brisbane and Queensland, they've increased by 30+%. I mentally cannot understand that, and I'm looking to get as much as I can before they go up even more, right? Now, I say this with the understanding that, the recession could happen and it could be just around the corner. The interest rates are continually lifting and maybe they could actually crash the economy. That's always a possibility. So, I'm not buying, stocks and everything hand over fist. I'm still making sure I get a lot of value for what I'm buying, and I'm not doing anything too crazy and speculative. Now, I want to talk about why I believe inflation could still increase. And, the first reason I talked about is that now I'm seeing in the supermarket people actually buying things maybe before they even need it. I overheard two Greek ladies at the checkout, and you know what they're saying? They're saying, I overheard them. They were just saying about, I don't know how people don't know in Australia what's going on in Europe. Prices are going up like crazy. They're running out of bread and wheat and stuff. We better store up. We better buy more, right? So they're talking about it, and they know the news from Europe because they're Greek. They probably have family and friends in Europe. They know what's up. We live in a globalized world. That news is going to travel even to, Australia, which is far away from everywhere pretty much, right? But that's happening across the world. We're seeing food riots in other countries that are, that don't have as much access to food. Now, number two is, of course, Russia, the Russian invasion of Ukraine. Now, if we take numbers that are very, very sort of broad, about 30% of the world's wheat supply comes from Ukraine and Russia. Ukraine is at war. You're not going to get much production. Russia itself, everyone has sanctions against them. We're not doing any business with them, so they're shut off, right? So that is the wheat supply. Fertilizer, somewhere around 30% comes from that region again, right? So we're cutting 30% of fertilizer. Around the 30% again of the natural gas is being cut from Russia to the world, right? And natural gas is actually a component for us, for anyone, to make fertilizer. So we're going to have 30% less fertilizer, less wheat, 30% less wheat, 30% natural gas, and also somewhere to the order of, let's say, approximately 30% less petroleum across the world, crude oil, because that comes from Russia too. We've just blocked off a major supplier of these raw commodities that we need to function day to day. We're talking about fuel and food, two of the biggest components of, whatever it takes for you to survive, for any place, any economy, any person, any body to function. You don't have that, you don't have nothing. And we just cut 30% off. That's going to be incredibly inflationary. And then you talk about also, I don't know if you know, if you've been hearing what's been happening in China, but they've been locking down city after city. Shenzhen, they're locked down. They're locking down Shanghai. Right? I think they're locking down Guangzhou, which is the number 3 biggest city after Beijing and Shanghai. It's Guangzhou, which is in the same state as Shenzhen. So that's probably going to get locked down soon too. Now, that means that Shenzhen, Guangzhou, they are major manufacturing hubs. Shanghai, major financial center, shipping ports, and so forth. All your clothes are probably coming from China. Any manufactured goods coming from China. If you're watching this on your phone, that's coming from China. Everything is coming from China. These clothes probably came from China, right? So we're going to cut that off too. The Chinese government is cutting that off too, with no end in sight. So, the definition of inflation, supply and demand, and these are one of the biggest factors regarding inflation, lack of supply. But not only that, came across this really interesting statistic, is that in terms of the cash that's circulating in the US economy, for example, 80% of the cash that's circulating has actually only been created in the last 1 to 2 years after the pandemic, right? According to M1's money supply. We used to be at 4 trillion, and now we have 20 trillion cash floating around the US and global economy. That's a 5 times increase in currency. It's a bit less on M2 supply. I think it's probably around a 25% increase. That could probably, or should probably, explain why we're getting 8.5% inflation everywhere across the globe. We've just increased the cash, the M1 supply. I'm going to show that. By the way, I'm showing that on the screen. M1 has increased from 4 trillion to $20 trillion. That's 5 times increase in money supply. Increase the money supply, you cut off 30% of raw materials from Russia, which is incredibly foolish for these sanctions. And then China locks down, right? So even if we're going to have a recession, I'm telling you one thing, I don't think this recession idea is going to go away anytime too soon. And, if they do slow the economy down with inflation, with the recession, while raising interest rates, really what's going to happen is that the price is going to still stay elevated, but we're just going to be producing less goods and stuff. It's going to be stagflation. So this is, I'm going to probably talk about, wrap the video up regarding, the best ways to protect ourselves. Now, if it is stagflationary, if we are going to have a recession, the way I'm parking my money is into precious metals, gold and silver. And these days, I don't really even do the actual physical, right? I'm buying cheap miners, quality miners that are not going to go out of business. Stuff like Barrick Gold, or in Australia, Newcrest Mining, which have a very, very cheap cost of manufacturing gold, for example. I think I'm a long-term investor. I invested like 2 years ago, but it cost them around $1,200 to mine a piece of gold, and the market price is $2,000. It's very hard for that company, for example, to lose money. Let's say gold drops to $1,500, which is massive. And gold has not been dropping in the last couple of years. It's been very stable, but slowly going up. And if I'm to be talking like a day trader or trader person, that behind me is the chart of gold. And any sort of technical analysis would indicate that it's about to pop over $2,000. We're seeing a trend up now, pushing into 2,000. Once it breaks that, we could be looking at $3,000 gold. And, as an investor in gold mining shares, that probably will do pretty well. Now, I'm not saying just because gold's going up and the chart looks like the direction's going up. It's not because of that. Here's a scenario. Inflation increases. Gold does, to a certain extent, track inflation. So that is why gold's going up. Now, let's say there's a recession. Well, the stock market crashes, right? But people generally get out of these risky assets and go into gold because it's the safest. So when there's risk in the economy, when the economy is going backward and we have a recession, gold goes up. But when there's inflation, gold also goes up. So heads you win, tails you win. That is the type of investment I'm looking to do. And, you can still probably buy certain companies, let's say gold mining companies, that are still, very profitable and good businesses. But also bear in mind the cost of fuel and petrol and gas, that impacts the price of mining gold. It's a core component of mining gold. So that's one strategy to mitigate this. I think that if you're buying cheap stocks, that's going to mitigate it too, because stocks generally over time keep up with inflation. They raise their prices. The businesses raise their prices. It's okay. And then finally, for me, the best strategy, and I think Finance YouTube always talks about stocks a lot, but I want to tell you about what I do and what I'm doing, and that's property. The beautiful thing about property is that you are leveraged. You're borrowing money from the bank, and you got to repay it back one day. But inflation goes up if you can handle the creeping interest rates. If your wages go up, or the cost of rent goes up, your rental income, or your job, one day you might be making 100K. In 10, 20 years time, you might be making 200, 300K. So I know in Australia, for example, I'm very familiar with this economy, but since the 1990s, our wages have gone up 3 times. So if $1 million property feels really, really hard to pay off, you just got to imagine that your income's going to triple in 30 years' time. And that initial $1 million is going to be so easy to pay off. And so you want to inflate the debt away. And the more you can borrow at this point without putting yourself in financial risk, the better it is. Because if there is inflation, you don't have to pay as much back, right? Because when you've borrowed that amount of money, you've locked that in, that amount of money you've got to pay back in. But you've got an asset like a property that will go up in price when inflation hits and the prices go up. But not only that, rents go up, everything goes up in price. So you have higher rents, and let's say interest payments, yes, do increase, but your rents will continually increase over time, and your interest rates will probably have to find a limit. And then one day you will have more rent coming in than your interest, and it'll be easy to pay off just with the rent alone if you're investing in property. So rental increases, rental income going up, and also just the general inflation going up, but you only have to pay that same debt in 20, 30 years time if you can do that, especially interest-only loans where you don't have to pay back the principal. You just drag out the loan until 20, 30 years time, and because the price of money is so cheap then, it's really, really easy to pay back that loan. In the meantime, you've got yourself an asset that is generating you rental income, keeping up with inflation, and you're all good. And if you're buying really cheap property, which I generally like to do, stuff that, for example, I'll give you an example. If you buy a 200K property, in Australia, you might have a piece of land for 100,000. And let's just not be exact like this, but let's just say you're looking at 300K property. In 300K property, your land is probably going to be 100,000 or to 150,000. Cost to build a house these days is at least 200,000 for a smaller house on that land. So the price of bricks are not decreasing. We have inflation, but prices rarely go backwards. So in theory, to build a house, let's say the land, for simplicity's sake, stays the same, but that the cost of building a house, anyone trying to replicate a house like that, it's going to cost them at least 300,000 to build a house. If you can find something under 300,000, let's say you get something for 280, right? Or even if you're even luckier, let's just say 250, 250,000, let's say, then in theory, anyone that can build a house in your neighborhood and expand the housing supply, they cannot cause that price to crash to the extent that it's cheaper than what you paid for, because it still costs 100,000 to buy that land, and it still costs 200,000 to pay all the people to build your house. There's no way you can make another house, one of these houses you buy, for under 300,000. And so in that way, even in a recession, you basically cannot lose money with houses that are cheaper than the cost, the cost of making a similar house. That's the way I see it, and that's why, that gives me a lot of confidence in terms of, investment strategy. And even if I'm heading to recession, I think I'm going to be, fairly well off. But of course, you want to manage your finances. You want to be very diligent and disciplined with, your personal finance, and not spend too much money, and, save your money, and, find a way to pay back the debt, or like have at least like more extra income in case anything happens, to the economy, or, save for a rainy day. That's, I suppose, common sense. If you ever invest, I would recommend at least quite a bit of funds in case anything happens. But that's my advice. Anyway, thank you for watching the video. If you liked the video, I'd really love if you can subscribe and hit the like button to support the channel. As you know, I haven't done the videos in a while. I do full-time work, and I've got other commitments to family and friends, and many and other things too. And it does take a lot to make a video like this, I have to say. It's very hard to, other people are making videos every single day, and they might be doing it full-time, but, this is all I got. So if you appreciate it, so I really appreciate you hitting the like button and subscribing, and maybe, helping support the channel. That really encourages me to make more. That's if you like the video. If you don't like the video, I can't help you. But if you've stayed until this point, I do appreciate it. Anyway, until next time, thank you for watching. And I usually do this, share, and I'll see you in the next one. Thank you, guys.